Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Okay, I can admit that perhaps I am potentially being somewhat naive in my predictions, forecasts and estimates. They generally tend to follow the "if everything went as well as Elon said" rhetoric. And although there is clearly no competition coming for Tesla this decade in the space of electric cars, there may be other certain threats to the company that perhaps we should explore as well. Because if the last few years have taught us anything, things don't always go as smoothly as we hope. In fact, this is probably how I look at my leaps investing. This isn't going to be a video about trading options. I will be attempting to identify risks that would be relevant to my options though. We do all these forecasts. We do bear forecasts too. As long as Tesla can manufacture and has the supplies, then they're going to be the customers. If they keep growing, then we're going to see the numbers. Demand is usually the biggest limiting factor to growth. And right now, Tesla's demand is just about unlimited. So what else might impact the stock price getting to the numbers we hope? I'm going to try and go through some issues Tesla might face. I'm not trying to brainstorm every single possible permutation that might happen. Of course, there may be natural disasters and other extreme black swan events. I'd want to focus on the more common, potentially likely concerns people bring up. This could somewhat be retitled as Potential Reasons Tesla Will Not Hit $3,000 before 2024. Although I already said that Tesla has no competition, I still hear it too much. Einstein said, if you can't explain it to a 6-year-old, you don't understand it yourself. I think I understand it well enough I could explain it to a 6-year-old. So here it is. EVs need batteries. Tesla will have over half the world's supply of battery cells. It seems that COVID still seems to be with us, and as we know, this has recently resulted in some lockdowns and is thus responsible for half of the tragedy we call Q2, the other half being the new money furnaces that we watched being constructed all last year. Most of the world has moved on from COVID and accepted it as part of our lives and do our best to prevent it. Fortunately, it is nowhere as fatal as it once was either, but China still seems insistent on lockdowns. Anyway, we know how damaging lockdowns can be in a quarter and could potentially run more risks with them in Shanghai in the future. Tesla operating in China certainly carries risks, but the return on investment was more than worth it. Those facilities paid for themselves quickly, so it is still worth Tesla being in China, and China very much need Tesla in order for them to grow out their cell industry. You see, although Tesla was the first company to not officially have a joint venture with another Chinese company, well, they basically have one with CATL. China needs Tesla though, as China wants to build out its cell and battery industry. You can only grow if you have the customers. Tesla is CATL's customer, and BYD now too. They can expand their cell business, and Tesla will keep buying from them. And as they're all LFP cells, Tesla can always use them in energy. People tell me that the CCP could end up nationalizing Tesla. Whilst this is literally something we have seen them do in the past, stealing companies and intellectual properties, I don't think this is a concern for Tesla. For one, I would say that if Tesla chose to, no matter what the CCP did, they couldn't make Teslas out of that factory. If they wanted to close down Tesla in Shanghai due to a threat to their own domestic market, then who would buy BYD and CATL cells? No one else can come close to making enough vehicles at a run rate to consume those cells. China need Tesla to consume all the cells that they make, so China ramp up their cell production and continue being the largest cell manufacturer in the world, so Tesla has a solid foundation in China. Although many are concerned that China will overstep their boundaries again, quite literally, and invade Taiwan. In my opinion, Taiwan is a nation that should be neutral like Switzerland. Not that that's probably going to happen, but TSMC is just far too valuable. That is the root of all global technology, and losing that would send us back to perhaps a decade of progress. Invading Taiwan is going to get every other nation to sit up and take action. I think this would be too far a stretch for China, particularly seeing how the entire world recently reacted to Russia. If such a scenario was to occur, it wouldn't just be bad for Tesla, but the entire world. This is not really so much a Tesla-specific incident. However, the control China has over all the processing and refining of so many important minerals is something the rest of the world needs to wake up to. This is too much control one nation can have over the world, as we are discovering lately nations' powers they have over the world. Like the US with the global reserve currency, and how these nations use said powers in times of modern day warfare. These are still minerals that hold a certain value and thus have a cost. Well, it's still a free market, but even if China did absorb all these minerals and left little for everyone else, well, they couldn't consume it all themselves, and they couldn't make a profit from it. So what would be the point? I think eventually Tesla will control more of their refining and processing of the ore as they increase their vertical integration. Remember though, Tesla does have good relations with China. Both parties seem happy with the partnership. It would obviously be remiss to not touch on the 4680 cells, given that the entire future growth of the company rests pretty much on the success of the production of these cells. and some could even argue the fate of consciousness as we know it relies on these cells hitting high volume production. And to date, we haven't seen them even in volume production. We all know how important these cells are, and everything else we talk about is almost just a distraction to keep us entertained whilst in the background Tesla are sorting out their 4680 production. It's frustrating we have not seen the progress we hoped. It requires more patience than we were initially told. It looks like we're at a stage of when though, rather than if, which is the main thing. And the wait may not even be that long. We could still see 4680s in volume production this year. Tesla are showing all signs of the future of this company reaching high volume production in the 4680 cells. Tesla is still investing on this being the future of the company. Okay, sure, we're having to revert to 2170 cells in the meantime, but Tesla don't have enough 2170 cells for Berlin and Texas to hit full capacity. That's why they're building these 4680 factories. The Cybertruck has to have 4680 cells, and high energy density too, especially if the Quad is coming out first. Elon is talking about the Cybertruck coming out sooner than later now, which is also a good sign. Berlin has made better progress than Texas, but it's not great. It's still losing a lot of money. Also, I would be surprised if Tesla even has enough 2170 cells to get to volume production in Berlin, especially if they're going to use 2170 cells in Texas as well. Perhaps it can just about break even due to Tesla only selling the higher profit margin Model Ys. Essentially, the success of the ramp at Germany is also dependent on the 4680 cell and structural battery production, the same as Texas. Like I said, the future depends on these 4680 cells. There is nothing else coming in the meantime for these factories. Panasonic's 4680s will be a couple of years away still. They could use LFP and do standard Model Ys, although it will inevitably be at an opportunity cost of the cells being deployed somewhere else. Berlin might have energy issues though, especially as we go into winter. I don't know how self-sufficient Giga Berlin is when it comes to powering the factory yet, but this could be a risk to European output. Although if it is, hopefully only temporary and would be rectified in a couple of years. Perhaps the main concern is the economy. How bad a recession might we face? This is out of our control and Tesla's, but can still have a heavy effect on Tesla's stock price. A recession should in no way impact Tesla's sales, even if it reduces demand. Tesla has a big buffer, which is their waiting list. On top of that, they have an even larger buffer with absolutely insane margins. Tesla has the highest chance out of any auto OEM of making it through the recession, by a long way. So if Tesla don't make it through the recession, then it's likely a pretty scary world, and your losses in Tesla will be the last of your problems. Having said that, the economy could contract more, interest rates could rise, liquidity could dry up, resulting in lower PE ratios, and thus lower valuations on stocks, and especially lower PEs for growth stocks. But we only have 12 to 18 months to potentially get through, and the economy can hopefully be on the path to recovery from there. If this video is about Tesla hitting $3,000 in 2 years, then I would hope we are out of any recession by then, so it won't be an issue. It might have meant that Tesla was able to dominate even more and buy up the industry whilst its blood is in the streets. The economy could hit Tesla some more, but Tesla might have also grown some more. Either way, historically speaking, the chances are we get through this recession within 2 years and back to usual market conditions. At least the one thing we can leave from the list is competition. Competition would be an issue if there were competitive EVs in the market that would force Tesla to reduce their prices and thus lose margin. But said competition can barely even compete with a 10-year-old Model S, and that's just in the EV technology, which isn't even the important part. It's cell manufacturing, which no one is coming close to the order of sales Tesla has. Besides, the competition is ice for a long time, and it'll be some time until EV OEMs even have to fight over market share. These are some of the main concerns that I hear from you, but if you see any other threats that I've missed that could also have a large impact, then by all means comment below. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.